all. The revenue expenditure. So you should see that, and then only you should certify, yes, everything is as per objective. So unless you, sir, some display problem, sir. Are you able to see, sir?
Yes, sir.
Yes, sir. Yes, sir. Resume slide slow. Okay. So the adoption or modification means intentionally objects being amended by passing a resolution. So without prior approval, don't amend the objectives. Otherwise, say you will lose your exemption. So then, as I have already told you, the audit report has to be submitted 30 days prior to the due date of filing of the return of income. Then the return of income shall be filed. So whenever you want to have exemption under 1023 CR section 11, ITR 7 has to be filed. ITR 7 itself filling up is a very cumbersome one. So you should, sir, I have been sharing the screen, sir. Automatically screen has gone out, sir. Automatically screen has gone out. Maybe from your side, sir.
Yes, sir. Please share, sir. Please share it, sir. Sir.
Once again, okay.
Yes, sir. Please, once again, sir. We got some technical glitch over there, sir.
Okay, sir.
On the bottom screen, share the screen, sir. Yes.
Yes, 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 yes. Yes, sir.
Visible, sir. Visible, sir.
Yes, sir. So the ITR 7 is asking several questions. If you want to answer all these ITR 7 filling up, many people, some erratically filling up has resulted into demand. In one case, are you having a registration? They said yes, give the number. That number giving they have forgotten. They have uploaded the ITR 7. They have given a demand of 76 crores. Only one fault in ITR 7, they have not given the 12AA registration. Simply automatically they have given. So though they gave 143(1)A opportunity, they could not see, or say they could not, though they have seen on the last day, they could not file their objection. Technical glitch in the CPC. Then automatically it has resulted into crores of demand. So filling up ITR 7 should be most carefully done. And then in the ITR 7, there are interlinks. So ITR 7 asks you about the revenue expenditure separately, capital expenditure separately, voluntary contributions, normal voluntary contributions, donations, and corpus fund donations, and investments coupled with accumulated income and normal investments. So all these details in the ITR 7 one has to, unless you satisfy these conditions, section 11 exemption will not come. That's what I want to drive home. Similarly, the other important condition is 85% of the same year income, same year you should apply. So once it's an income, same year income, same year you should apply 85%. So then only the remaining 15% is exemption. Normally for computing sake, what our friends are doing, if gross income is 100, less standard deduction 15%, income to be applied 85%, I have applied 87%. Okay, you will compute it. But while filling up the audit report 10B, or while filling up ITR 7, don't claim that 15% as it is as, yes, exempted income, exempted income. If you have spent 88%, you have applied 88%, only that 12% income is exempt. 88 you already applied. So what is that 100 minus what you have applied? Remaining only is the exempted income. Don't claim 15% as standard. So just small mistakes, which common mistakes I have been quoting for just for your reference sake. Then accumulation of income, and by chance, if 85% of income could not be applied, then two routes are given in section 11, whereas under section 1023C, only one route is given. So they didn't say you can file accumulation form. They didn't say two types. Here in section 11, there are two routes. Section 11.1, explanation, class 2 is there. That is for which purpose you are accumulating, we need not mention. That is Form 9A. So either in the immediately following year or in the year in which you are going to receive some income, though you have accounted for the income, if you are going to receive the incomes after some time, for example, you are following mercantile system. To tally your bank interest as income as per 26 years, because it is a accrual system, you made some 5 years FDs. Yours is a temple. For 5 years, if you make only, you will get a higher rate of interest. So the interest you may receive after 5 years, you can choose monthly payment, interest, quarterly payment. By chance, you have chosen for 5 years. Then the income has to be accounted on accrual basis, but you could not apply because the money has not come to your hands. In that case, go for Form 9A. So this Form 9A electronically has to be filed before the due date of filing of the return. Similarly, if there is a specific purpose for which you are accumulating the income, for example, a hospital, they want to buy an MRI machine or a CT scan machine, which runs into crores. 2-3 years income, 4 years income, unless you accumulate in the 5th year, you cannot buy that machine. Maybe a blood bank, or maybe yes, the college wants a big building with 1 year income, a building may not be. So 2-3 years you are accumulating. Then file Form 10 for a specific purpose. Purpose is different, object is different. Your object may be education. For educational purpose, I am accumulating, don't write. So a number of decisions are there which says you must, when you they ask the purpose, you should mention the purpose. Though assessing favorable decisions are there, by mistake they have done, courts may, but department generally expects what is the purpose. Purpose is different, object is different. So this is Form 10 is as per section 11(2). Why? Because in Form 10B, both these things they are asking. Have you chosen an option under 11(1), explanation, class 2, or section 11(2)? So it is asking how much, In 1 year, both the forms may be there. So some part of the unspent, with the 85% falling short, that which you could not apply. March 30th, some donor, big donor has given. March 30th, he gave, March 31st, you could not apply. Maybe April, May, you would have applied. So in the next year application amount, earlier year amount is there, which you have to deduct. So for that, Form 9A or Form 10, for a specific purpose you have accumulated. For Form 10, it must be in 11(5) mode, separately identifiable. Your general funds may be there in 11(5). But once you file Form 10, for Form 10 identifiable, section 11(5), you are having some 10 deposits in the bank. But which deposit you are earmarking for this Form 10 accumulation, you must specify in the ITR 7, and it is a condition in the Act that once you give the option by Form 10, that deposit must be separately earmarked and shall be used only for that purpose in the year in which you want to utilize. That means in between you cannot use general, just like that whenever you want bank deposits, you are encashing and using for your objects. No. Within that general objects, general deposits, there should be, once you file Form 10, earmarked deposit, earmarked usage must be specifically for that purpose. Because Form 10, once you file, the 3 conditions are within the 5 years. 2022 Finance Act has said earlier 6th year people were using. No, within 5 years means 5th year only. 5th year, if you are not using it, becomes the income of the 5th year, not even the 6th year. That controversy has been removed by the 2022 Finance Act. The first condition, you should keep in 11(5) mode only till it is used. Second condition, within 5 years you should use. The third condition, for the same purpose you should use. You cannot change the purpose. If you want to change the purpose, section 11, subsection 3, capital A, you should go to the assessing officer. There is some impossibility that though you have filed 3 years back for a purpose, that purpose we cannot now achieve due to technical reason, due to government statutory laws, so some other thing. So you express your inability. Then for change of purpose, the assessing officer has got the power to give you permission. Then for the change of purpose only, then only you are satisfying. During the previous year, how you have satisfied such a deposit, you have to give both in ITR 7 and in the audit report. If there is a violation also, you should give in this Form 10B or 10BB audit report, because it is asking the conditions, positive satisfactory conditions, the 10B is asking, and negative conditions also it is asking you. Then section 11.5 is a very big section, in the sense all public religious institutions, charitable institutions must deposit or invest. The two words used in section 11.5 are deposit or invest. There are number of decisions which say what is meant by deposit, what is meant by investment. The deposit, for example, with a chits subscription, schools normally when they get surplus money, they go for chits, Sri Ram chits, Margadarshi chits, like that. So is it a deposit or is it an investment? Both sides decisions are there. It's not either, neither deposit or investment decisions are there. AP High Court and other high courts, yes, it is a violation, they said. So the purpose and the source, all these things are necessary. So similarly, the section 13(1) to 9 are conditions whose violation will forfeit section 11 exemption. So the 11, 12, 13, 11 is exempting section, 13 is taxing section. That means the 12A conditions, section 11 conditions, if you violate, how the violation will be there, enumerated in 13(1), small a, small b, small c, small d. For example, 13(1)b, for any particular religious community, if you use 13(1)c, for related parties, trustees, managing trustees, or say relatives of trustees, institutions where these trustees have got substantial interest. If you keep the money with them, if you lend the money with them, or if you buy from them the land, buildings, or if you pay remuneration to the trustees. So all these conditions are otherwise known as 13(1)c violation. If it is unreasonable, then section 11 exemption shall be forfeited. Whether total section 11 exemption shall be forfeited or not was a controversy. 2022 Finance Act has specifically said only to the extent of that violation, it becomes a taxable income, attracting 30% tax. So that controversy has been settled by the 2022 Finance Act. So these conditions, 13(1)d, whether it is a within 15% surplus income or the accumulation Form 10 income or any income, or even for that matter, the donors giving in-kind donation of shares must fall within section 11(5). For example, a private company shares, a trustee has donated to a public trust. Then within 1 year from the end of the financial year in which these private company shares are received by this trust, it must try, it must 100% try to satisfy. It sells these private shares somehow or other. They are not quoted, not freely transferable, but it must use its power and then must convert them to fall into section 11(5) approved mode. So impermissible investments, what will happen? 2022 Finance Act has dealt with the impermissible investments, how to deal with the taxation has been done by the 2022 Finance Act. So like that 13(1) is having, 13(2) gives examples of violations. When shall be taken 13(2). Then 13(3) defines the persons. Like this, the conditions to be satisfied. 13(8) was there till last year. Then 13(9), 10 are the new sections introduced during 21 and 22. So maintenance of books of accounts and getting the audit filed within the time. So all these things, audit reports, all these conditions are there. 13(10) gives that what is taxable income and how to compute after these negative conditions prevailing, how to compute the income is given in 13(10) this year. So like this, the conditions to be satisfied to get section 11 exemption, though I have given a list, 100% all these are given in the 23 provisos given to section 23C. 1023C is one section, is having provided also, provided further. So like that 23 provisos it has given. In all these provisos, all these conditions, what all that are there in 1023C also, 100% ditto. So 85% application, Form 10 filing within the time, getting the books of accounts audited, filing that year, all these things are there. So the 1023C amendments this year are there. So it is having a 23 provisos and 16 explanations. So all these things are read together, nothing but the cumulative conditions one has to satisfy. Now there is one bar also. So 1046 is for government promoted, government managed institutions like your Huda, Tuda, or say public government corporations. If they want specifically its exemption, they should apply under 1046, and if the exemption is given, they cannot claim 1023C. Simultaneously, both 1020C and 1040C, either this or that you should opt. That is the important amendment. And then all the 1020C and 12A are similar, as I told you, but only one difference is there. Even now, I have searched, I could not find the answer. So what is the difference? In 2014 Finance Act, they brought one beautiful amendment, most assessee favorable amendment. What they said in 12 capital A subsection 2, that with the three provisos being added to section 12 capital A subsection 2, saying that if any public charitable institution, public institution, if it gets a registration earlier under 12AA, now from 22-23 assessment year onwards under 12AB, now for the earlier years, the assessing officer is precluded by reopening the assessment merely for want of registration. So if once you get a registration, for earlier years also the income is deemed to be exempt, provided you satisfy the other conditions. The registration condition not satisfaction is not disentitling you. That condition is not there in 1023C even now. If you apply 1023C now, from now onwards, for earlier years. So on this basis, I say whoever is not having registration even now must apply for registration immediately. Now you apply from the current year, you will get only the registration. 10A, if you apply now, though the act says for next financial year it should apply, the CPC is giving, because there is a controversy, CPC is giving from the day of you applying. For the current financial year itself it is giving. The act says from the next financial year only you are entitled to. So that difficulty is we have applied current financial year after April 1st of 22. They are given for 22-23 financial year also. So once you get for 22-23 financial year, because of this section, for early reads also you can claim, provided you satisfy all other conditions. That is, you got your books audited, you have maintained them, no return is filed, don't worry. You got the registration and your income is exempt. The assessing officer just merely, no change in the objects clause in the past 3 years or 4 years. So like that, all the other conditions you satisfy, then automatically your income will become exempt. So that's what I would like to drive home the point, very, very important point. Then the 1516 amendment, as you all know, there was a double deduction question before several courts. So double deduction was permitted for the capital expenditure, because the capital expenditure is also income applied from your current year income, revenue income, not only the revenue expenditure. If you acquire a asset like building, depreciable asset, furniture, or vehicles, or some other equipment, so the from the current year income, because you applied for capital expenditure, it is deductible once. And again, depreciation as per the accounting standards, you have been claiming the normal commercial depreciation. That was also an application, was the decision earlier to put a full stop from 1516 assessment year for those assets whose cost has been claimed as application, depreciation shall not be allowed. Indirectly, for those assets whose cost you could not claim. I give this general example. If somebody starts an engineering college, very first year, where is the income? Only first year students are there. Whereas in that year itself, all the other 3 years or 4 years, students accommodation, teaching rooms, college buildings, hostel building, everything you will construct with loans. Loans may be from trustees, loans may be from financial institutions. So loan with the loans, when you acquire the buildings, you cannot claim the cost of that capital expenditure. You cannot claim even if you want to claim. Payment 2022 Finance Act put a rest for the judicial loan repayment in the area of repayment is an application. Loan repayment is an application. So the buildings depreciation is eligible in all the subsequent years because in the original cost as application, the subsequent years. So these are all the decisions. Even I have given the 2021 latest Madras High Court decision. You please go through. So even now, the fixed assets have to be maintained into two separate categories. Those assets whose cost has been already claimed, though for accounting purpose, true and fair, you calculate the depreciation, that depreciation is not eligible for application. Those assets whose cost you could not claim, their depreciation in the financial statement it will come, and also in the computation, in arriving the word or the amount applied, you can get. Now another, I mean, just like your business disallowance sections, those sections are quoted and they said mutatis mutandis is applicable. 40 capital A3 cash payments, 100% disallowance, more than 10,000. So 40 AIA expenditure liable for TDE.
Sir, no voice, sir.
Now, sir?
Yes, sir. Yes, sir.
Okay, okay.
Okay, sir.
So, so I have given you that 40 capital A3 and 40 A are mutatis mutandis applicable for claiming the expenditure. Here there is some explanation is necessary. Many people think, sir, 90% I have applied and satisfied 40 capital A3 and 40 AIA. 10%, it is in the standard deduction exemption. Where is the question of taxable income? If you read carefully the amendments, any income that you have applied violating this is a taxable income. So in that, you please see, whatever you have applied is 90% you have applied. Out of 90%, 80% you have satisfied, 10% you have not. So the 10% automatically will become taxable income. Not that 10% is a out of exempted income, out of the standard deduction of like that 15% I have spent 10%, no question of tax is not the reason. Law is not like that. If there is a violation automatically taxable income. For that you cannot set off anything. So that is the answer. So you have to comply 100%, not just like business people. So please note the difference. Then from 1/9/2019, a new amendment has come that compliance of any other law. You please see, if it is an educational institution, if the state government is prescribing, you should not charge beyond or above a particular fees, then automatically you have to, every educational institution claiming exemption from section 11 or 1023 must comply any other law. So compliance of any other law which is relevant for objectives is now mandatory. So from 1/9/2019, that is 2021 assessment year onwards, if you don't comply the other law, automatically not only you lose section 11 exemption, your registration can be cancelled. So that is the seriousness, because in earlier 12AA, now in 12AB, cancellation powers are given to the commissioner. One of the reasons is, or one of the grounds for cancellation is, if you violate any other law which is material for the purpose of achieving your objectives. Not any other law means normally you and I also violate the traffic rules. That law, when you violate, not that your school bus has violated the green line, as a yellow line, and say crossed it and fine is not that. Your objects, main objects, so education, fees. So like that medical ethics, government prescribed in during COVID time, don't charge beyond this fees. You charge, they have levied a fine. That may be a reason for your cancellation of your 12A registration. So for when pursuing your main objects, if you do any other violation, that can be there. Now the other amendments. Earlier, up to 21-22 assessment year, without any registration, without any approval, if it is solely educational institution having gross receipts up to 1 crore, its income is automatically exempt. You can file ITR and claim exemption without any approval, if the subsection you are going to satisfy. Similarly, for medical relief, if you are having 1023 small AE, education small AE, the limit 1 crore was raised from assessment year 22-23 from 1 crore to 5 crores. So up to 5 crores, you may have earlier 12AA registration. You need not have 12AB registration from 2023 because unconditionally. Sir, by chance, by mistake, I have taken 12AB registration also, sir. Even if you have taken 12AB, if you are sure that in the coming 2-3 years, your gross receipts will not cross 5 crores, opt for this 1023 small 3 AD only for all the education institutions. So then you surrender your 12AB. So if it is up to 5 crores and within the coming 2-3 years, there is no possibility of your gross receipts exceeding 5 crores, avail this general exemption because it is unconditional exemption. 85% you should apply. 11.5 should be there. All those conditions are not there. So unconditional exemption, better you avail. So this is one important amendment from 22-23 assessment year onwards. Then what is this 5 crores? Earlier 1 crore is per institution. So if a society is having three education institutions, kindly others keep in mute, sir. So if the per institution 1 crore, now per one entity 5 crores. So per institution 1 crore means others, if we are having 30 institutions, 3 institutions like junior college, medical, nursing college, high school, per institution 1 crore they used to claim. That controversy has been set right by saying that per entity 5 crores limit. So that is this thing. Now aggregate annual receipts of all the institutions, you should note it. So not per unit. So this is the now what is the gross receipts? There is one favorable decision. Gross receipts not to exceed 5 crores means by chance you are having in your gross receipts some small donations, some small interest from banks, main activity receipts only, not interest and the say the donations like this. So this edition which has come last year 5/10/21 by the Allahabad High Court. So these are given 439 ITR 79. Those who are in the verge of that limit of earlier 1 crore and now 5 crores can avail this exemption. So then comes from 22-23 onwards, important amendment. What is this? See, earlier, from expenditure, reverse back working, people used to say, what is that reverse working? The expenditure, if it is 85, what is the income? That only they show the income. All the remaining income, they are saying corpus fund donations, they have received and then we have deposited them in the bank. So now they have put a full stop saying that the section 11(1) subclass D, which gives blanket exemption for corpus fund donations or specific direction donations, now are conditional. Earlier, any corpus fund donation section 11(1) was a blanket exemption. That blanket exemption has been removed now. And what they say, unless you keep that money as per section 11(5) mode, which is permissible mode, and there is one in whatever is not coming within this permissible mode as impermissible mode. These two words you have seen. So if this 11(5) permissible mode, you should maintain specifically, then only it is exempt. So you please see. So the corpus fund donation, which you take normally in the balance sheet, must be identified with 11(5) investments on the asset side. The liability side corpus fund donations, or else if you prepare a receipts and payment account, earlier this condition was not there. People use this 11(1) corpus fund specific direction donations for revenue expenditure also claim application. That is not there now. You have to keep it in 11(5) mode investments only. If once apply for revenue expenditure, that 11(1) exemption is not there. And they have given one benevolent amendment in the same thing. What they say, in any subsequent year, if you have some surplus money, if you keep in 11(5) mode of earlier year's tax offered income, then again exemption can be claimed. So in a particular year, you received corpus fund donations, but keeping them in FD, keeping them in buildings is not possible because exemption. So you show it as income and application both sides. But whereas in subsequent year, whenever you get surplus money and you deposit or invest in specified modes, in that year, again, you can claim your income exemption. So this is what the important amendment is there. For that sake, I'm going to show you, because from 23-24 assessment year, the word applied, they have said only on cash basis. All these years, for example, an educational institution, gratuity payable after 10 years of retirement, every year on accrual method they are claiming. Several expenses on accrual method they are claiming. Now from 23-24, for claiming section 11 exemption of the income being applied should be purely on cash basis from 23-24 assessment year. So for this 22-23 itself, what I am advising you, you convert your 21-22 assessment year accrual system into cash system under 22-23 assessment year, and thereby from 23-24, which is mandatory for application cash system. In the case of Section 8 companies, Companies Act mandatorily asks them to follow the mercantile system. They cannot do it. If by chance mandatorily, if you are following a mercantile system, if you add opening accrued expenses to the current year income and expenditure expenses and deduct year-end balance sheet accrued expenses, outstanding expenses, opening accrued expenses, add current year expenditure, minus closing accrued expenses, the balancing figure is equal to paid expenses, cash paid expenses. So cash means through bank only. So paid expenses. So it is allowable. So cash paid expense only is allowable from 23-24 assessment year onwards because of 2022 Finance Act amendment. But my advice is convert the 22-23 itself into a cash system. So when you convert into a cash system, in addition to your certifying the income and balance sheet, you prepare a receipts and payment account, which is nothing but a cash flow statement. So cash flow statement preparation, you have to follow. Then only you can satisfy the condition, that is revenue receipts, revenue income is applied for either revenue expenditure or capital expenditure. Capital receipts you received, you exclusively intend specifically capital receipts are used for capital expenditure, or any loan receipt. I will show you my receipts and payment account, and then I will explain this and then come back to you. See, for example, what I advise you is this. What do you advise you? Prepare the receipts and payment account in such a way, which is a cash flow statement, in such a way that first top half is equal to revenue receipts, revenue payment. Second half is equal to capital receipts, capital payments. Sir, my sharing of screen is visible, and can anybody say yes, sir?
No, sir, not visible.
Not visible, my sharing of screen?
Visible, sir.
Oh, that is okay. This is
Screen is
something
eligible,
we are
sir,
talking
but
about.
trust receipts and pay.
Audit of trust and Form 10B, sir. Sir, visible, sir.
No, not 10B. This is revenue receipts and revenue payments.
Yes, sir.
Revenue receipts are not visible, sir.
Not
No,
visible.
no, sir. No, sir. Your receipts and payment account is not visible, sir.
Okay. Then I will go back and
I thought there is a link, sir. Link, I think so. Trust R and P PDF on this, sir.
అదే
అది
అదే
click
అది రాలేదా?
లింక్ క్లిక్ చేయాలనుకుంటాను సార్ అది సార్ ఫ్రమ్ యువర్ సైడ్.
లింక్ క్లిక్ చేశాను. సో వన్స్ అగైన్ ఐ విల్ గో బ్యాక్ అండ్ డూ ఇట్.
ఐ థింక్ షేరింగ్ స్క్రీన్ లో ఆ స్క్రీన్ షేర్ చేయాలనుకుంటాను సార్. That will be open.
No, sir. Now also not visible. You are
No,
getting
sir.
only Form
Not
10.
yet. Not visible.
Not visible, sir. Still, sir.
Then
I
you
thought
are-
it's opened in another screen. I think so, sir. I mean,
I see.
In
Okay,
your-
okay, no problem. Then let me continue then.
Yes.
Are you getting 10B at least now?
No, not even 10B, sir.
Okay.
10B we can able to see, sir. 10B we can able to see.
You are able to see 10B?
Yes, yes.
No,
Yes,
sir.
sir.
It is there, but it is not open.
Not open, sir.
Now, sir?
No, sir.
Okay. You are not able to see.
Sir,
Okay.
press on Alt tab, sir. Maybe it will open in another window. I think so. Alt tab.
Alt tab. Okay.
No, sir.
Okay.
Not yet.
Okay. Then let me continue my presentation without that also. Let me continue.
Okay. Minimize this
So the-
presentation, sir. Okay. Minimize this presentation.
Okay.
Maybe in another, right?
So you are seeing the PPT presentation, no?
Yes, sir. PPT is visible, sir. Sir.
Okay. So you must prepare the receipts and payment account in such a way. First half of that. See, your receipts and payment, left side receipts, right side payments. So in this receipts and payment account, horizontally, if you make it 2, first portion is equal to, top portion shall be is equal to revenue receipts, and the right side revenue payments. These revenue receipts also you should bifurcate into revenue from your main objects operations, maybe school, college, educational receipts. Receipts from property and investments, that is deposits, interest, buildings rents, shops rents, like that. Then third portion is equal to business receipts. If there is any incidental business activity, maintenance of books of accounts separately is necessary, and getting them audited also is separately necessary. So if you are having any incidental business, what is business is as per the Income Tax Act definition 213, business means any adventure in any of trade, commerce, manufacture is a business. But in my view, any profit oriented repetitive activity other than the main activity is a business. So profit oriented activity other than the main activity, which is incidental to the main activity, Any charitable institution, religious institution shall not take up a business activity which is other than the incidental. For example, a hospital is there selling medicines to public, including patients. Public also may come and buy. Then if the selling medicines is an incidental activity for medical relief, you must maintain separate set of books of accounts and get them audited also as per the business rules. And that income shall be applied for public charitable purpose, that is the medical relief purpose. So what are such business receipts? What are such business expenditure? Separately you maintain. Similarly, the last part of the revenue receipts is equal to normal donations. So the donations, revenue donations, that means not specifically this thing. These revenue donations also two types. 10BB asked specifically, whereas in 10B also it is not asked, but for in computation it is necessary. What is that? Name, with name and address giving donations, without name and address giving donations. That is known as anonymous donations. 115 BBC, one section is there. It gives a limit, either 5% or 1 lakh rupees, whichever is higher. So then the anonymous donations beyond the total donations 5% are taxable straight away at 30%. So what are the anonymous donations by this charitable institution? For every donation, there should be name and address. So normally nowadays, all the charitable institutions open a net account, it's a net banking, net donation, net hundi like thing. So anybody who wants to donate, please donate to our bank account. So from others' bank account to the bank account of the institution, the money will come. Only code numbers will come. Name and address of the donor, majority of the institutions are not able to get. Now the question comes, are they anonymous donations and the auditor has to certify them as anonymous and pay 30%? It is a very tricky question. Without name and address, no bank account will be there. So through bank only, I received through somebody's bank, money has come to my bank account. So where is the question of name and address? Not available. They are available somewhere, but not with me. So you take a declaration from the management and then say name and address is available. If necessary, they will acquire. So at present, for audit purpose, they could not give. So like that, you don't classify them as anonymous because there are two decisions like that. Court decisions based only, I am giving you the advice. So the revenue receipts, I wanted you to bifurcate into objects related revenue, property and investment related income, business receipts separately, donations, anonymous and non-anonymous, that is identified donations, unidentified donations. These revenue receipts. Revenue payments also, administrative expenses, because in ITR 7 it asks you about the administration expenses, objects related expenses. For example, salaries may be there in the objects. Teacher salary comes in objects related expenditure, whereas the society office maintenance salary comes in administrative expenditure. Separately, it wants ITR 7. Similarly, business, if you are having business related expenditure, and then donation to other trusts for corpus or revenue, separately you maintain. When you are auditing this cash flow statement in a format, unless you prepare based on this cash flow statement only, you have to fill up form 10B or 10BB. So your normal income and expenditure and balance sheet will not give you these details. So you have to necessarily prepare a receipts and payment account. Based on that only, you can correctly fill up, correctly claim the exemption, correctly fill up this. Why I say the Income Tax Act itself, after these amendments, is insisting that any charitable institution, any public religious institution, from its income, normally the revenue income, either revenue expenditure or capital expenditure is application, 85% if it applies. So from revenue, you can apply capital expenditure and claim exemption. Or secondly, your revenue receipts are small, but from capital receipts also you can meet the revenue expenditure. The Act is permitting corpus fund donations of this year, from sale of assets, investments this year, you are meeting your revenue expenditure. Then also the corpus fund donations are exempt, and then sale of assets is exempt, because that's you are offering them as income and meeting the revenue expenditure. But if you recoup in subsequent years from your revenue income, because you are an obligation that a corpus fund donation must be represented by earmarked investments, then in the year in which you can claim the general exemption once again. So because you have applied 85%, then also you will not have any taxable income. So the second part, the second half of this receipts and payment account is equal to capital receipts, capital payments. Why should you separately identify these capital receipts, capital payments? Why? Because in a particular area, you may raise a bank loan and then go for fixed assets. Like I gave the example of a engineering college buildings, furniture, bus. You are purchasing a vehicle of a school or a college with a vehicle finance. So in that year, with vehicle finance, you are purchasing a vehicle, neither income nor expenditure will come. Expenditure will not come capitalized there as application. Loan is not income. But in the year of repayment, you have to repay EMIs. So in the year of repayment, that loan repayment is an application. Earlier by court traditions, now Act itself is amended. So specifically any loan repayment, but earlier you should not have claimed it. So as I gave the example of with the loan you got the buildings, with the loan you got the vehicles, you have not claimed it earlier. So now the loan repayment, you can claim it as application. So how much loans this year you have raised? How much loans you have repaid? So this is necessary. So in the cash flow statement, capital receipts, capital payments, second half portion, I am giving you the corpus fund donations, how much you receive, and 11.5 investments, how much you have made. Sale of assets, how much you have made, purchase of assets, how much you have made. Because for sale of assets, there is a special section, section 11, subsection 1 capital A, which says if one sale of asset is resulting into the same money, same year, purchase of another asset, no question of any income. For sale of assets, no question of computing capital gains. But sale of assets, apart from revenue income, under section 11, subsection 1, subclass small a, 85%. Whereas section 11, subsection 1, capital A, this sale of assets specifically is given if you purchase new assets, or if you are not able to purchase, if you keep the money in a bank FD for minimum 6 months, CBTD circular. So bank FD is also an investment asset. So you sold the land and kept for 6 months in bank FD, your 100% income is not liable for tax. So when you prepare the receipts and payment account, see, preparation of receipts and payment account precedes the books maintenance. So you should ask your client from 1/4/21 itself to maintain corpus fund donations bank account separately and how you are using it. To maintain sale of assets bank account separately, how you are using it. So for revenue receipts, all you can keep on bank account. But whereas for capital receipts, loan accounts, loan money, how you have used, sale of assets money, how you have used, corpus fund donation. So for these three, I advise, for clarity's sake, for satisfying the law, these capital receipts I used for specifically for capital purpose this much. What I could not use for capital purpose, I used necessarily for revenue purpose this much. So this vice versa, revenue income for capital payments, capital receipts for revenue payment, you should identify and classify, then alone your audit report is correct of income applied. Loan repayment is an application. So loan, how much, when you have raised, what for you have raised earlier year. Now, are you repaying it from your income or another fresh loan? You are repaying the loan from your income, then it is application. If you are repaying a new loan from another loan, it is not an application. So these words, strictly one should, through accounts capable of proving in case of scrutiny, otherwise certifying wrongly, definitely chartered accountant who is certifying will be made liable. In this digital era, if a chartered accountant is doing some small mistake, automatically the income tax department is referring. So knowingly, unknowingly doing things is not that. Chartered accountant is certifying based on your certification, that is income applied. We have given you exemption. So at the time of scrutiny, it should stand for a test. So you should take the pain of preparing, identifying the sources. So that's what I have given. So I will go to the other say amendments just for clarification. So so the loan borrower application, as I have, repayment shall be treated as application. There is amendment for 22-23 specifically. Earlier by court tradition also it is available. These things here. The another important amendment is earlier through court traditions, any 1 year excess application beyond the income, as if there is a set of carry forward and set of rule, in the subsequent years it was claimed it was allowable, including depreciation of earlier years not allowed, or say depreciation not utilized. Depreciation is an allowance, expenditure is a say loss. So these things courts were allowing. Now the amendment for 22-23 assessment year is no question of any set off, no question of any carry forward set off, or say deduction or allowance for any excess application of earlier years. So this is a very important amendment. So if you had applied, it's gone. You cannot say that you are entitled to carry forward. So then, as I have told you, the 11-2 only for 5 years you can claim. 6th year, because of decisions earlier was there, that's not there. And even if you by chance give broad objects, it is permissible. There are decisions, but I don't want you to give a narrow purpose. Don't want you to give a broad object. Give the purpose. Some people will say only to meet college salaries. No, to meet the expenditure, you say. Or say you want to buy the vehicles, okay, to buy the equipment, plant and equipment, you say. So like that purpose you give, but don't say for educational purpose I am accumulating, because yours is an education institution. So neither broad objects you give, nor you give the narrow purpose, but Form 10 you file, thereby you are entitled to claim it. So from 23-24 assessment onwards, the cash system has been made mandatory for application. So for application only cash system means, can you follow for a expenditure side cash system, income side accrual system? So either you follow accrual system totally for both sides, or you follow then only true and fair. So the both sides you follow completely accrual system or completely cash system, because they are allowing cash system. For some institutions it's not possible to follow the cash system. For example, in Andhra Pradesh, educational institutions, they are depending on the government's fees reimbursement. Government, due to its own reasons, every financial year, what the education is entitled to, same year they are not reimbursing. Sometimes it takes 1 year, sometimes it takes 2 years. So with a backlog, they are reimbursing. So when they are with a backlog, they are reimbursing. And they ask the institution to submit financial statements also, sometimes some institutions. So your financial statement shall depict how much is the arrears from government. Based on that, some institutions have gone for bank loans. Banks will ask, where is your balance sheet? How much is due from government? Tell me. And give an undertaking that the moment the government gives, you will clear off the loan. So in such cases, going for cash system, the fees due from government, you may not be able to display. So better you continue the accrual system. For income tax purpose only from 23-24 assessment year onwards, on payment basis, then what is meant by payment? If you give a check on March 31st and check is encashed on April 10th, check given date is the payment date. I have given you a decision. You are able to see in the PPT. Are you able to see, sir? All of you? Hello? Anybody?
Sir.
You are able to see my...
Yes, sir. Yes,
Yes, sir. Check dealing in date of payment is treated as paid.
as paid. So there is a decision. I have given you the decision. So yes, sir. So can a trust change from mercantile system to cash? Up to 21-22 assessment year, we had a mercantile system, accrual system. Now for 22-23, can you shift to a cash basis? For that also, I have given you a Gujarat High Court decision. So you can change, no problem, because it is a law is insisting, and law itself has changed from mercantile system to cash system. So you can also change the system necessity, no problem. So if it is possible, try to change into cash system. If it is not possible, try to continue the mercantile system. Even if you follow the mercantile system, simple way of proving the cash system of claim of application is last year balance sheet accrued expenses add to the current year total expenses. Total expenses means cash paid plus depreciation also, and deduct from the total closing balance sheet as on this year end balance sheet outstanding expenses, automatically paid expenses you will get, that you claim. That's how I advise. So then question, you cannot what is income? What is income to be applied 85%? Some small controversies and decisions I am putting before you. Either the government grants or FCRA donations, let us say. Foreign Contribution Regulation Act mentioned donations sometimes you will get. A foreign country will give. For example, Germany will give to a charitable institution which is working in a rural area. Please construct toilets. I am giving you donation. So the FCRA money is coming with a condition that you should use it for public toilets. So now grant may come in 1 year, expenditure may spill over to next year. Same year you need not, you cannot. Sometimes government also gives the grants to these NGOs who are running old age homes, children's Anganwadis. So the government gives grant. So these grants can you or you have to, in this cash system, in the year in which the grant has come, you have to offer it as income. The court has examined these cases. I have given you some decisions. They say mere grant receiving is not income. The conditions, if they are satisfied only, it is income. Mere receipt is not income for section 11 purpose. So you show them even in the accounts as a liability. If you want more safer side, if you are offering that grant as income, file form 9A. Say that, yes, I have taken the grant, but I have to satisfy some conditions. Maybe form 10 or form 9A you file. In the next year or next subsequent year, you utilize the money as per the conditions. So that's how, so you need not per se offer them as income. This is how I put it. Then from 23-24 maintenance, it's only technical, as I said. Earlier also books maintenance was there, but indirectly, because you have to issue an audit certificate based on the books of accounts, indirectly books maintenance was there. Now directly they made it. Why they made it? If you are not maintaining books of accounts, then it becomes a, as per section 1310, specified situation income, liable for tax. So the specified violation tax is there under 115 BBI. That is a separate thing. Whereas now this is a books you are not maintaining means it comes in specified situation income. Thereby, you are not entitled to general section 11 exemptions, but a conditional exemption only from revenue income, revenue expenditure is allowed. From all other expenditures, these are all the conditions. No section 11-12 benefit, no benefit of the capital receipts being, if you purchase the asset, no capital receipts, sale of asset will become income, taxable. So from that, no revenue expenditure, only revenue expenditure will be deducted. So like that, no exemption 11-1D, capital receipts all become revenue income. So no question of benefit. So if you books you are not properly maintaining, then automatically these exemptions you will lose. You cannot say I'm accumulating also. So these benefits you will lose. So then comes a separate set of books of accounts, not only for the total institution. Normally, if a educational institution is having 2-3 educational things, so for example, educational society may have, as I said, as a high school, a junior college, and a degree college, let us say. So degree college, university will monitor university recognition. University wants separate set of books of accounts. For a board of intermediate to ask for a junior college, separate books. District education officer will ask the school to maintain separate set of books on how many admissions, how much receipts, how much payments they want for fees regulation. They want a yearly statistical data. Though you maintain separate set of books on for those respective authorities' approval, for year end for this society, totally you should club all these things into one receipts and payment account and then apply these things. So if, for example, if the same school is having outsourced buses for transportation of these students, then bus fees you are collecting is more than the expenditure you are incurring year after year. Then it is a business incidental to main objects according to me. So without buses, children cannot come. School is, college is in the outskirts of the town. If you want to bring children, you have to necessarily engage this bus. So, but bus fees you are charging more than your expenditure consistently. Then you better keep separate set of books of accounts. Say that bus running is incidental to main activity. So thereby you are satisfying separate set of books of accounts are maintained and that the income is used for non-profit activity. That is the main charitable activity only. And especially the section
What about
215.
sale of books and uniforms, sir?
Pardon, sir?
Sale of books and uniforms?
Sale of books and uniforms is also incidental to main activity, but you are attracting GST there. It is permitted under the Income Tax Act, under GST, separate GST registration you have to take and say, just for the sale of books and uniform, you have to take a GST registration, exempt. The school fees you should claim as exempted supply. Every month you should file the return. Is it necessary? Then necessary, if you can take all this burden, go ahead. From income tax point of view, separate set of books of maintenance only is necessary. And that income you are using for school, college, no problem. But for GST, filing the returns and then getting input, getting output tax, all these things a little bit cumbersome. That is the answer, sir. So the business, some activities where your charitable purpose definition section 215 is having 7 limbs: education, medical relief, relief to poor, preservation of environment, yoga, preservation of monuments, architecture things, and then finally advancement of another object of public utility. What is this advancement of another object of public utility? What is not falling in the above heads is falling in this. I give general examples of for preservation of Telugu language, literary programs, dance programs, Bharatanatyam, Kuchipudi, or say hockey club, cricket association, sports, games, all these comes in advancement of another object of public utility. If those charitable institutions who are having advancement of another object of public utility, if they carry on any commercial activity, what is that commercial activity? For a profit motive, by chance you are conducting one show, so dance show or say music show or literary program, selling the tickets, your expenditure is less, and fundraising program, then it is a with a fundraising, with a profit motive, if you do any activity is a business. So the business word is so wide. So then such receipts, if the 1 year gross receipts exceed 20%, it is no longer a section 11, no longer a charitable purpose activity, and section 11 exemption for that year is for next year. Again, you can continue. For that year, you should offer it as taxable income. Pay the tax 30%. So you should be very careful. Separate set of books of accounts. Sometimes some charitable institutions, they may be for relief to poor and also advancement of another object of public utility. Lastly, they may be medical relief and again advancement of another public utility. So you should be very careful for which object, what are the gross receipts, are they business related, is it incidental activity or is it main activity? These things are very, very important. For all of them, you should maintain separate set of books once it is a business. So for the interested persons, see what are the amendments. Earlier controversial decisions were there. Now the act is clear from 23-24 onwards. If related party expenses are there, benefit directly or indirectly, if the interested persons get directly or indirectly, that much income is not entitled to section 11 exemption. You should offer it for tax. And also those persons also have to pay. Here the charitable institution is not entitled to section 11 exemption to the extent of that expenditure. to the extent of that benefit passed on to those interested persons, here it will pay institution. And those individuals, those persons, maybe individual, any person, because section 56 to 10 says, any person receiving any benefit without consideration or inadequate consideration, even if it is from a 12A, 12AB recognized person. So here it is a interested person. So there it is a interested person receiving a benefit is not entitled to 56 to 10 exemption. They are also liable for tax. So two ways it's going to affect. Not only that, it is not paying the tax, it is not ending the matter. A new penalty section from 23-24 is introduced with this 2022 Finance Act. What is that new penalty section? 271 AAE. The 271 AAE says how harsh it is, you please see. In the first year, when it is noticed that this interested person is getting some benefit, the tax is payable, not the tax, penalty is payable 100%. Whereas in the second year, when they get, the penalty is 200%. So in the first year, when the interested person gets the benefit, the penalty is 100% on this institution. And second year onwards, 200% each year, the benefit that is passed on. So with related parties, you will say reasonably I have paid the rent for the trustees building used for my objects. The assessing officer will say it is unreasonable. Once it is unreasonable, pay the tax, pay the penalty. Second year onwards, by the time the matter is settled, 2 years, 3 years over. For first year 100%, second year onwards 200%. So how much care you should take? So this penalty section newly introduced from 23-24 assessment year. In addition to this 115 BBA 30% tax, one should be very careful. So the impermissible investments. Here, penalty is not there, only tax is there. So what is impermissible investment? Section 11.5 is permissible investment. 13.1D prohibits any investment beyond section 11.5. By chance, if you make, then that is liable for tax only under 115 BBA, not liable for penalty. These also from 23-24 assessment year. These are all the impermissible assets. Say, by chance, if you receive a donation of shares, what you have to do during the year, if you receive nothing, no problem. So subsequent year, you should convert that shares or say other than 11.5 mode into 11.5 mode. So that's what the decisions I have given. So you might have got those shares as corpus fund donations or as non-corpus donations, but you should 11.5 you should comply. By chance you purchase the shares, then in the year you purchase, to that extent your income is becoming taxable. If you got as donation, it's all right. But whereas if you got as a purchase, then which is impermissible investment you purchase, then the income to that extent is taxable. So the 13.10 and section 13.11 talks about specified situation. So where your income computation is special all these years. If some violation is there, how to compute the income was a controversy before the courts. Now the amendments have come saying that once you have these violations, it is a specified situation, then your revenue income minus revenue expenditure only, without giving any exemption, is taxable income. So the charitable institutions now you have, as per the act, two types of incomes. One is a normal income, which is liable with the basic exemption and normal rate of slab rates. Second, violation income, which is specifically taxable at 30%. So two types of so 30% is 115 BBA for some violation sake, specified income. Just like your 115 BBC anonymous donations, this 115 BBI is for institutional income for violation. Normal income, other than that, you have not violated anything. As it is, you got a taxable income. Example, 85% you could not apply and you don't want Form 10 or Form 9A. You don't want to accumulate. I want to pay the tax. Then basic exemption 2.5 lakhs, then 5%, then 20%. Ordinary slab rates, ordinary income. So these two types of taxation is available. So just I would like to bring these conditions to your notice. So then the 30% 115 BBI I have specified when it will become. So specified income. So the circumstances as they are given in the section, I have repeated that you have more than 15% accumulation if you want to do. So without this thing, then it will come in specified income, deemed income. That is a section 9A and 10B conditions you are not satisfied. That means first year you accumulated, second year you have violated. So form 10 you filed, the deposit you have withdrawn, then it becomes a specified income. Related party transaction 13(1)(c), 11(5) violation 13(1)(d). 11(1)(c) is a foreign income applied outside India. That is 11(1)(c) violation. So these are all the things. Though section 164(2) MMR is there earlier, now the 115 BB section itself is saying notwithstanding anything, any other provision. So 164(2) earlier is now superseded. So 115 BBA is superseding the 164(2). So it is like this. Then the penalty in 271 AAE. So the penalty is for unreasonable benefits passed on to trustees. So what is reasonable, what is unreasonable? Examples are given. So we have to be very careful. This penalty, as I have explained you, in the first year, 100% of the aggregate income of that year. If for the first time the violation is noticed, 200% of the aggregate income from second year onwards. So then what is meant by specified violation is defined in 12AB4. This specified violation, 6 circumstances are given. So for these specified violations, registration cancellation is the ultimate method they have suggested. If you have this specified violation is definition given under 12AB4, if specified violation is there, now cancellation from in 22-23 financial year onwards, assessment year 23-24 onwards. Earlier the specified violation was not there. Cancellation earlier was their power under 12AA subsection 3 and 4. 12AA is not operative from 1/4/21. From 1/4/21 to 22, 31/3/22, 12AB 4 and 5 old. Now from 1/4/22, 12AB 4 and 5 are replaced with the definition of specified violation. So specified violation is if the money is used for objects other than the specified objects. So then automatically it is specified violation, your registration can be cancelled. Number 1. So for this, some of the decisions and how they operate I have given. So sorry. So specified violation 2, if books of accounts are not maintained, your registration can be cancelled. If for a private religious purpose, though yours is a public religious, if you apply for private religious purpose, it is also a specified violation. If a charitable is applied income for particular religious community, if any activity is carried is not genuine, that means something what you disclosed is different from actual ground reality, then also it is not genuine. If it is not genuine, your registration can be cancelled. You are not complied with any other law. Already I have explained for your objects, what is related mean that you have not complied, then also the specified violation will come, which ultimately may lead to, if there is a specified violation, this is one of the reasons for cancellation. The commissioner only is having the power to cancel. The assessing officer who is conducting 143(3) may bring to the notice of the commissioner this specified violation, or commissioner may get the information on his own, or through the risk management strategy. Now computer is analyzing 360 degrees of every PAN number. Through that risk management strategy, if some information is coming to the notice of the commissioner, then the commissioner can give a notice to the assessee that consequence of cancellation with effect from 1/4/22. Now this thing is, say, if they cancel, there is no section 11 exemption, everything will become cancelled automatically. The ATG recognition given also will get cancelled. So 115 TD, one section is there, 115 TD from 2016 onwards. So fair market value of all the assets is liable at MMR. So very draconian, dangerous section 115 TD. So these are all the consequences of cancellation. So cancellation can be done if there is a specified violation, or if the AO refers that violation to the commissioner, or the risk management strategy computer selects that this is there is a specified violation. So earlier under 12AA3, when it can be cancelled, cancellation being a penal provision, fresh evidence, fresh argument. Before the assessing officer, what you could not produce the evidence to support your case before the commissioner once again. So if it is a small mistake, subsequent after cancellation also, you can apply for a re-registration because you already paid the taxes. Again, the same trust, same thing can be. So the officer, after coming to issuing the first notice of cancellation, within 6 months must say, yes, I am satisfied, the cancellation I am order passing. I am not satisfied, though it has been brought to the notice. So because the evidence is given, so I am not satisfied, he can drop the cancellation proceedings. And he must pass the same order to the AO and to the trust. These are all the procedures for cancellation of the registration given. So specified violations, I have sometimes by mistake, the assessing officer. For example, your room rents are more than your normal main object income. Oh, they are commercial, they are giving rooms for shops. So it's carrying on a commercial activity. Ultimately, the commissioner may decide it is incidental from property income. Doesn't matter that they are not on their own carrying on commercial activity. Addition, I have quoted. So like that, the assessing officer's view may be concurred by the commissioner, or he may not concur with that opinion. Then we can come out of it. So this hereafter the days are going to come. Majority of the institutions are going to be questioned like this only. The intention of all these amendments is nothing but putting the Sitaki Agni Pariksha antare. Alaga, all the institutions, you prove that you are genuine. Simply, if you are not genuine, I can cancel. You prove you are genuine means lot of effort is necessary. So like that, merely putting the question and asking you to prove your genuineness is a very bigger task. So specified violations, I have dealt with them. As the time is running out, 6:30, I must give some time for your question answer. That's why I'm in a hurry. So what is meant by business? So I have given some decisions. So what is public purpose? So specified violation, I dealt a lot because these decisions may help you in case you get a notice. And anonymous donation sake, some officers started using penalty. That penalty cannot be levied. That also I am giving you. So 12AB4 is a penal provision. So additional evidence can be given. This decision also I have given you. This is a 2022 latest edition. Only April, 2 months back decision. This decision also I have given you. The Allahabad Calcutta High Court decision. So this is how you must be ready to face the penal consequences. So after cancellation also, fresh application can be made, or even on the commissioner's order of cancellation, you can go to High Court and still argue that your case is not coming within the permissible provisions of the Income Tax Act, or you can file an appeal to the Income Tax Appellate Tribunal also. So the Form 10A is giving 18 new conditions. So all these conditions you should satisfy. What the conditions say, what is not there in the Act, what is not there in the rules. This registration certificate is putting a condition that no asset shall be transferred without the knowledge of the jurisdictional commissioner. What do you mean by asset? Your old furniture you are selling, gold jewelry, sometimes the big institutional temples will sell. Each time shall I go to the permission? So for each asset sale, you take the permission of the any asset, no asset shall be transferred. This was one of the conditions in Form 10AC. Can we satisfy? So is it the intention? Maybe immovable property, if you are selling, you take the prior permission, is a reasonable thing. For all the movable, your old cars, old vehicles, school buses, old vehicle buses, you have to sell. You must go to the commissioner and get a permission. Is it a simple, easy task? For 2 states, 3 states, one commissioner is there. Applying them, going there, getting the order. So these are all the interpretational issues, and then why they are going to that extent. So there should be some clarity about this. Every bank account you should inform. Public money when you receive, in which bank account you are going, you should inform. This is one of the conditions in NAC. Is it possible? Every time you open a bank account, you should go there, inform them. So these are all the any violation of these statutes. Please, no violation should be there of the income tax provisions. TDS delay you file. So is it a violation? So there should be compliance of all the income tax act and rules. Okay, it's one of the conditions. TDS violation, is it a violation? Non-compliance, thereby you are violating the registration. Any registration conditions, if you violate, registration can be cancelled. So is it possible to satisfy all these conditions uniformly for all the people they are giving? So with these things, I am closing. And now for the organizers, few questions if they take, I will try to complete. So within the given time, I would like to complete. So for the organizers, if they come forward, I will close my PPT. So we can go for a question answer, sir.
Thank you, sir. Thank you very much, sir. Forum is open for question and answers, sir. Members are requested to ask the questions directly. Please.
Good evening, sir.
Good evening, please.
I am Charitable section. How are you, sir?
Please tell me.
Sir, I have a small doubt. Since section 115 BB has been newly introduced, where would be the application of maximum, the question of application of maximum marginal rates, sir?
Sir, 115 BBC, 30% section itself says no question of maximum margin.
Right.
30%.
Right.
Sir,
So,
115 BBC conditions if are not satisfying, the income is taxable at maximum margin rate, not maximum margin rate, 30%.
Right. Sir, another question. For the assessment year 21-22, we have filed some returns of income of what we call charitable trusts, which are having a 12-year registration as well as what their total receipts are very much less than 2.5 lakhs. Of late, we are very much surprised to see in the e-filing portal of the client that there are some notices stating that proposal for adjustment under section 143(1)(a) stating that audit report under in part that 10B have not been submitted.
Sir, the act is clear. Section 12, capital A, subsection 1, small b says,
Yes.
if your gross receipts exceed 2.5 lakhs only, audit report.
Right, sir.
So you quote that section, CPC may not be aware. So you quote that section, you will get it, sir.
They are not necessarily keeping the clients in confusion, sir.
You have to fight with the CPC. You have to fight with the CPC, sir. Sir. Then, sir.
Right, sir.
Okay.
That's all from my end, sir. Thank you.
Please, any other, sir?
Sir, other members.
Good evening,
Please.
sir.
Good evening.
Good evening, sir. I am Krishna Kumari.
Please tell me, madam.
Sir, this maintenance of books, you said we can continue with mercantile system, but in the computation we can claim it, we can compute on the basis of cash system. Isn't
You are
it,
right.
sir?
100%.
But
100%.
will it come as a violation?
No.
It will
No.
not come
No.
as
No. They are simply saying application of income hereafter shall be on cash basis. So just like your 43B, your business people 43B, what it says, business expenditure, any expenditure on mercantile basis, only 43B specified 6 items on cash basis. So like that, here for charitable institution also only application on cash basis they said. So application you can do on cash basis. That's what I say.
in the computation we can make on cash basis.
Because you have to compute and then certify. That's what.
Yes.
In 10B or this thing, based on auditor certification only application is given. That's why I say. Yes, please.
Okay. Okay, sir. Then another question, the sale of assets, that 11(1)(a) specifically says that it is exempt only when we purchase new asset with the proceeds. So, but you were saying that it can also be used for revenue purpose.
Madam, to claim the exemption 11(1)(a) says if you purchase a new asset, it is not income. But you have not purchased it. For your revenue expenditure sake, you sold the asset, you offer it as income. See, 11(1)(a) says if you want to claim it as exemption, it will not come in the normal computation if you purchase a new asset or if you keep in the bank FD for 6 months. But you are not able to, you sold the land only to meet your salaries. outstanding salaries, then it is an application. You offer it as ordinary income, sale of asset is ordinary income. You apply it as ordinary expenditure, no problem.
So if we say sell the asset and utilize it for the purpose of loan repayment also, it will be okay.
Definitely. It is a loan repayment is an application. Automatically you can avoid the tax. It's correct. Okay, madam.
Okay, sir. One more question, sir. These for some trusts we have applied freshly, though they are existing earlier also. Value application we have made it afresh and they have granted provisional registration. And then this form 10AB is required to be filed within 6 months from the date of commencing the operations. The operations were commenced long time before.
From fresh registration when you got, within 6 months you say it is already existing, so again 10AB file. The 10AC, on the day you receive the 10AC, within 6 months you apply 10AB.
Again 10AB we have to apply, sir.
Within 6 months.
Okay, sir.
For an existing
If it is not applied, sir,
then madam, you are violating the condition of provisional registration itself. Is this provisional registration is conditional? If it is commencing the operations within 6 months, it should apply.
yes,
Within 3 years, if it is not commencing the operations, so provisional registration is valid. Before the expiry of last 6 months of the 3 years, you should apply the condition. The conditions, if you don't satisfy, means the provisional registration will lapse. That's what I say.
will lapse. Okay.
Yes.
Okay, sir.
That's what.
Okay, sir.
సార్ ఎక్స్క్యూజ్ మీ అండి, కృష్ణప్రసాద్ అండి, భీమవరం నుంచి
చెప్పండి.
ఫల్గున్ కుమార్.
చెప్పండి.
సార్ ఇప్పుడు యాక్చువల్ గా 10AC ఫామ్ ప్రొవిజనల్ రిజిస్ట్రేషన్ అని 5 years కి ఇచ్చారండి ఒక పర్టికులర్ క్లయింట్ కేస్ లో.
దాని మీద సిబిటిడి క్లారిఫికేషన్. బై మిస్టేక్ వీ గేవ్ ప్రొవిజనల్ 5 years ఇచ్చిన అన్ని 5 years అనుకోండి, ప్రొవిజనల్ అనుకోబాకండి అని ఒక క్లారిఫికేషన్ ఇచ్చేసి సిబిటిడి ఇష్యూడ్ ఏ నోటిఫికేషన్. దాని మీద క్లారిఫికేషన్ ఇచ్చింది.
థ్యాంక్ యూ సార్.
One question is in the chat box, sir. Interest credited to savings bank account and kept in savings bank account of the trust be a valid mode as per 11.5?
100%. 11.5, any bank, scheduled bank deposit is a valid mode. No problem.
Thank you, sir. Thank you, sir.
సార్ ఫల్గున్ కుమార్ గారు, నాకు ఒక డౌట్ సార్.
చెప్పండి సార్.
అది మనకి ఏటీజీ డొనేషన్స్ ఎవరికైతే ఎగ్జామ్షన్స్ ఉన్న ఇన్స్టిట్యూషన్స్ ఉన్నాయి వాళ్ళందరూ కూడా ఫామ్ 10BD ఫైల్ చేయాలి కదండి?
అవునండి.
31st May లోపు.
అవునండి.
చాలా ఇన్స్టిట్యూషన్స్ ఆధార్ నెంబర్ కానీ పాన్ నెంబర్ కానీ అప్డేట్ చేయలేదు సార్, ఫైల్ చేయలేకపోయారు. మరి వాటి కాన్సిక్వెన్సెస్ ఏంటి సార్ రిటర్న్ ఫైలింగ్ దాని మీద?
ఇన్స్టిట్యూట్ డొనేషన్స్ అనే దాని మీద ఒక బుక్ ఇచ్చింది, మీరు చూడండి. మే ఫస్ట్ వీక్ ఆర్ సెకండ్ వీక్ ICAS గివెన్ ఆ డొనేషన్స్ హౌ టు రిపోర్ట్ 10BD అని ఒక ఇది ఇచ్చింది.
అవును సార్, వాడు ఇచ్చిన CSV ఫార్మాట్ లో మ్యాండేటరీగా పాన్ గానీ ఆధార్ గానీ వాటర్ ఎంట్రీ గానీ అడుగుతున్నాడు సార్.
అవును, మొట్టమొదటి 3 అడుగుతుంది, ఆ 3 లేకపోతే వేరే కూడా అడుగుతుంది. అది మీ దగ్గర లేనప్పుడు, మీరు లేనప్పుడు దాన్ని అనానిమస్ అనకండి, దే ఆర్ ఆబ్టైనింగ్ అనండి. ఎందుకంటే 10BD కెన్ బి రివైజ్డ్. ఫస్ట్ ఇయర్ ఇది ఉన్న వాటిని ముందు 10BD మే లోపల ఫైల్ చేస్తుంటే మళ్ళీ అన్ని ఆప్టైన్ చేసుకొని రివైజ్డ్ ఫైల్ చేయండి. టోటల్ డొనేషన్ మీ అకౌంట్స్ లో ఉండే డొనేషన్స్ కి 10BD కి రికన్సిలేషన్ చేయండి. చేయకపోతే అనానిమస్ డొనేషన్ ట్యాక్స్ నోటీస్ వచ్చేది గ్యారంటీ. 1 year తర్వాత, 2 years తర్వాత, 3 years తర్వాత నోటీస్ వస్తుంది. సో వాట్ ది యాక్ట్ సేస్ యూ హ్యావ్ టు ఫాలో. లేవంటే 30% ట్యాక్స్ కట్టండి. వాడు ఇవ్వలేము సార్, మేము తేలేము, తేకపోతే 30% కట్టేయండి. అది గవర్నమెంట్ సేస్.
యాక్చువల్ గా ప్రాక్టికల్ ప్రాబ్లం ఏంటంటే చాలా టెంపుల్స్ లో అన్నదానం జరుగుతుంది సార్. అప్పుడు
రిలీజియస్ ఇన్స్టిట్యూషన్స్ కి ఏటీజీ తీసుకోకూడదు.
రిలీజియస్ ఇన్స్టిట్యూషన్స్ అన్నదాన ట్రస్ట్లు ఉంటాయి కదా సార్, వాటివి
రిలీజియస్ ఇన్స్టిట్యూషన్ ట్రస్ట్ కి ఇంకొక వేరే ట్రస్ట్ ఉంటే, సబ్సిడరీ ట్రస్ట్ ఉన్నట్టయితే.
అవునండి, అప్పుడు భోజనం చేసి 100 or 200 ఇచ్చేసి వెళ్ళిపోతుంటారండి వాళ్ళు.
సార్ బీ ప్రాక్టికల్. వాళ్ళు ఇచ్చిన 100-200ని మెయిన్ ట్రస్ట్ టెంపుల్ తీసుకుందని రాసుకోండి. టెంపుల్స్ కి అనానిమస్ డొనేషన్స్ పర్మిటెడ్. టెంపుల్ బై చెక్ వారానికో నెలకో ప్రతిరోజునో ఆ అమౌంట్ ని అన్నదానం ట్రస్ట్ కి ట్రాన్స్ఫర్. రిలీజియస్ ట్రస్ట్ కెన్ గివ్ టు చారిటబుల్ ట్రస్ట్. చారిటబుల్ ట్రస్ట్ కెనాట్ గివ్ టు రిలీజియస్ ట్రస్ట్. ఒక సిస్టమ్, ఒక మెథడ్ లేకుండా వాడు ఏదో చేశాడు సార్ అంటే, ఆడిటర్ ఉన్నాడు, వాడు చేసినంత క్లీన్ చేసేదానికి ఆడిటర్ పని. ముందే సిస్టమ్ ఉండాలా, ముందే క్వశ్చన్ ఉండాలా. వాడు అన్ని చేసేసిన తర్వాత రాశానంటే 30% ట్యాక్స్ కట్టమని అనాలి మీరు.
ఓకే సార్, థ్యాంక్ యూ సార్.
ఓకే
సార్,
క్లోజ్ చేయొచ్చా
సార్? వన్ మోర్ డౌట్ సార్. ఇప్పుడు 10BD లో మనం ఇచ్చిన లిస్ట్ కి టోటల్ తర్వాత వేసిన రిసిట్స్ కి టాలీ అవ్వాలా సార్? ఇది పర్వాలేదు.
100% టాలీ కావాలి, లేకపోతే వాడు నోటీస్ ఇస్తాడు.
ఓకే. సో టోటల్ అమౌంట్ మనం టాలీ చేయవలసిందే సార్ దానికి దీనికి.
చేయవలసింది.
సార్
Sir, thank-
May 31st లోపు ఫైల్ చేయకపోతే వాటి పరిస్థితి ఏంటి సార్? ఇప్పుడు కొన్ని ట్రస్ట్లకి ఇప్పుడు ఆయన
Notice tax కట్టుకోవాలి.
లో ఫైల్ చేయలేదు సార్.
టాలీ చేయకపోతే అనే ప్రశ్నలు వస్తాయి సార్.
ఫైల్ చేస్తే మనం
Act is
అమెండ్ చేసుకోవడానికి ఆప్షన్ ఉంది సార్. ఫైల్ చేయకపోతే ఏంటి సార్ పరిస్థితి?
సార్ ప్రొసీజరల్ థింగ్స్ ఇవి. ప్రొసీజరల్ థింగ్స్ కమిషనర్ దగ్గర పోవాలి, మళ్ళీ కండోనేషన్ డిలే తెచ్చుకోవాలి. ఎనీ ప్రొసీజర్ వైలేషన్ అంటే కమిషనర్ కెన్ గివ్ ది పర్మిషన్ సార్, ఇది ఫస్ట్ టైం వచ్చింది, ఇది మాకు కాలేదు అంటే సెవరల్ హైకోర్ట్ సెవరల్ కండిషన్స్. కోవిడ్కి ముందు కానీ కోవిడ్ తర్వాత కానీ ప్రొసీజరల్ థింగ్స్ వైలేషన్స్ ఎక్కడైనా వచ్చినట్టయితే, కొత్తవి టెక్నాలజీ, వీళ్ళు ఫేస్లెస్ అసెస్మెంట్, టెక్నాలజీ కొత్తది, కొత్త ఫామ్స్ ఆన్లైన్లో ఫైల్ చేయని తెలుసుకోలేకపోతే అయ్యా మాకు హైకోర్టుకు పోతే హైకోర్టు ఆన్ ప్రిన్సిపల్స్ ఆఫ్ న్యాచురల్ జస్టిస్ టైం ఇవ్వండి, మళ్ళీ ఒక 3 నెలలు ఇవ్వండి, 6 నెలలు ఏ కోర్టునే చెప్తుంది. సో ఇవన్నీ ఆల్రెడీ డెసిషన్స్. కమిషనర్ దగ్గర అయితే కమిషనర్ రిఫ్యూజ్ కూడా చేశాడు. దెన్ హైకోర్టులో ఒక 20,000 30,000 ఖర్చు పెట్టారంటే ఒక రిట్ వేస్తే హైకోర్టు ఇస్తుంది, ఇంకో 6 నెలలు ఇప్పుడైనా ఫైల్ చేయవయ్యా అంటుంది. సో ఇవన్నీ న్యాచురల్ సార్.
Sir, one more request, sir. RNP PDF and 10B annexed PDF కొద్దిగా సప్లై చేయండి మాకు.
నేను 2 రిసిషన్ పేమెంట్ 10B ఇప్పుడే మెయిల్ పెట్టేస్తాను, మీరు మెంబర్స్ కి సర్క్యులేట్ చేస్తారు.
Thank you very much.
అది
Yes, క్లిక్ అయ్యింది.
కంక్లూడ్ సార్.
Okay, sir. Thank you, sir. Thank you very much. Now it is I request Ravi Kiran to say the vote of thanks.
Sir, thank you for giving the opportunity, sir. I would like to thank our chief guest, guest of the honor, Subbarao garu, for ex officio of our districts and our to the precious for this precious time. And I would like to thank to our speaker, Falguna Kumar garu, Dr. Falguna Kumar garu. So a special enlightening for us more about this charitable trust, sir. It is whatever we are listening, anytime if doubt will come, sir, when filling the forms and other things. It is more subject, but we are in the masters in the charitable trust, sir. We get that's why you are in the great temple of Lord Venkateswara, you are auditor of so many years. So we are happy, appreciate your good one, sir, because we are a good auditor for that good temple. So